You know, Fed Chair Powell always gets criticism no matter what he does, or at least, you know, traders will blame him for the sell-off. Is there any reason to think that any of this was Fed-induced? We did see the selling after the news conference yesterday. Maybe that traders didn't get any fresh data on or fresh impetus for stimulus from the Fed?
I think the Fed message was pretty clear. There's a commitment to keep zero interest rate policy in place until it seems at least 2023 based on the new inflation guide. And so I don't really think it's a message from the Fed. I think some of this was coming because the market had rallied so much. But I think the focus is also turning towards the U.S. elections and, you know, uncertainty around just how long it might be to get a clear result reported out. So I think that's going to continue as we go into the presidential debates later this month as well.
Stephanie, I mentioned it there just at the close, the oil price strength, but other commodities have been pretty strong of late as well. What do you make of that?
Well, I cited copper before being a 36-month high. That is absolutely an indication that the global demand is improving. Of course, there's a supply situation with copper versus other commodities as well, which is favorable for copper. But I do think that's the one commodity I look for as a tell. They call it Dr. Copper for that very reason, right? So that, to me, is very important. And that's where I am actually investing in terms of the underlying commodity in a Freeport-McMoran kind of thing. So I think, look, the economies around the world are healing. They're not booming, but they're healing. And that's because we have fiscal and monetary policies in place everywhere. And as the Fed just told us yesterday, they're keeping rates lower for longer. And also, they're going to let inflation run hotter than they have in the past. So, again, that is why one of the reasons I think that the cyclicals are doing better, and they will continue. I think this has legs.
But, Stephanie, I mean, we did have fiscal and monetary stimulus. We still have monetary stimulus, but a lot of the fiscal stimulus has run out, and there's no sign anyway that they can make a deal, more of it to come, at least before the election. So does it really make sense to buy those cyclical groups with that big uncertainty hanging over the economy?
Yeah, I mean, I do, because I think you're going to get a fiscal package, because you cited it before, right? Initial claims are still very, very high. And I would agree, even though they are on average, they're down 12% from the August average levels. So that is, we're seeing an improvement, but they're much too high. You absolutely have to do something. And if we have to wait until the elections, maybe we have a speed bump in the economy shorter term. But there is a lot of momentum that is building in other parts of the economy. And as I mentioned, manufacturing is seeing a V-shaped recovery without a question. And a lot of that does have to do with the weak dollar, also with the stimulus in place, with the favorable tax environment. So I think that you do want to have exposure to cyclicals. I've said you also want to have a barbell and have some secular growers, because I really believe in the total addressable market stories, especially in some of the technology names. You just have to be valuation sensitive, in my opinion. But you do this barbell because I think they both can win.
Well, just one other quick point, Sarah, is that the rest of the world is probably on the manufacturing side booming pretty well. I mean, you look at China loan growth, you look at their manufacturing sector, they're kind of back to business. So I think the stuff that's working in the market in those industrial areas are generally global. And so that's another piece of it.
Joyce, you mentioned the election, so did Stephanie. Yeah. Do you think this is something that affects all U.S. sectors equally, or is it more of a sector-specific concern for markets?
Well, we've done some modeling about this. I mean, we've basically looked at a scenario that what if you rolled back about half of the tax benefit, and what would that mean for EPS? And we take about $9 off of EPS. So I do think that with the infrastructure plans that, you know, a proposed Biden administration might put into place, you would have certain sectors like materials do better here. But the questions we've really been fielding have been about the tax outlook. I think the other thing that we're looking at is really some of the market technicals as we go into quarter end rebalancing. And here we think there could be about 200 billion of negative rebalancing flows. Now, that's more technical, it's short term, but it is something that is a real reminder that market liquidity and market depth is still a problem.